Okay, traders, welcome back. So I briefly spoke about reversals in the previous video, and I want to go through that in a little bit more detail now, okay? Because when you come into a 4-hour zone, there is a high chance that it will break and it will continue through, but it all depends on the momentum in the market and what the actual plan is, okay? So in terms of catching a reversal, from that area of interest, or that, so it could be a manipulation point, it could be a 4-hour zone, it could be supply and demand, it can be anything that you want to use this candlestick pattern at, okay? Again, I would recommend the 30-minute time frame and above for anything like this, because when you get lower than the 30-minute time frame, everything gets a lot more choppy and a lot more, it looks like there's so much more indecision. What's happening is 1 minute it's going up, next minute it's going down, next minute it's going up. When you get to the 30-minute time frame, it just seems to run so much smoother, okay? And the first thing I want to show you is, if you remember in the previous video, we were talking about these wicks here, and we were talking about the closure of the 4-hour. So for me, number one is, if the 4-hour does not close below the level, well, there's a chance that that level is going to hold, okay? So that's the first thing that you need to consider when you're looking at these zones. If a 4-hour candle was to close below this level, then there's a very high chance that that level is going to follow through, all right? At least for the short term, and at least for enough time for us to either get to break even. So if we're wrong, you know, it doesn't really hurt very much. If it's going to hold, well, in that case, the area of interest, there's a high chance that the 4-hour, it may still close below, but what we need to do is we need to drop down to the time frame of the 30-minute or the 1 hour, and we need to look at these candlestick formations, because what you'll see is we've got the low here, and we've got a lower low, and then we've got here, and this is what's the most important, okay? This is now a higher low, okay? And if you look at the top of the candle, so if we mark this area off here, okay, what we've got here is we've now got a higher low and a higher high, correct? Okay. Now, in the opposite of this move, if we were to create a wick around about here, and then this candle was to move past this wick here, the chances are that it's going to continue, right? However, on the flip side, if price is going to reverse, well, we're going to be looking at this wick here getting taken by this wick here, so this will in terms be the liquidity grab, okay? So we're now looking at this area within price action of, let me just move this out of the way a little bit so you can see it a bit clearer. So you've got the low, we've got the lower low, and then we've got a higher low, and then we've got a higher high, okay? So you'd have to wait, you know, maybe an hour and a half for this formation to show up. Now, once we've cleared this high, and this low has not moved past this low here, okay? So this low is now protected as the low. This is the liquidity grab, okay? Reading this on a 30-minute time frame, you're gonna see a higher low followed by a higher high, okay? So it's not rocket science. You're basically looking at the market and the structure of what's happening within the candlesticks, not so much the overall price action, but the structure of the candlesticks on the 30-minute time frame and above, okay? So what we do then, we wait for this closure, okay? So we've got one candle down, failed to close below, okay? We've got the next candle, which took the low. So it kind of, what it's doing is it's activating early sellers, okay? Because as soon as this happens, people think, well, price is going to continue down, let's get in. They put this stop losses above here, and then you'll see that the next candle fails to move past this low, okay? And what happens, these stop losses get taken out, which activates, this is a different variation of liquidity, okay? So sometimes you'll have liquidity down here. All right, so liquidity will lay below the zone, okay? So they come down, they take the liquidity, and then what will happen is it looks as though on a lower time frame that price is going to retest and come back down and continue through, and the momentum is going to take it bearish in the market. But what then happens is those stop losses are taken out, okay? So they've taken liquidity from here. They've now added more liquidity in the form of whoever's trying to sell through this level is now been taken out. So liquidity is taken once, liquidity is taken twice. Okay. What you then need to figure out is, okay, well, that's a reversal pattern. It's been an hour and a half and price has failed to close below the level. We've got a low, a lower low, followed by a higher low and a higher high. So what are we going to do? We're going to do very similar to what we did in the last video, where we're now, instead of looking for shorts, we're going to look for buys. Okay. So when this candle closes, this one here, not this one, not this one, when this candle closes here, okay, we're going to place a limit order a few pips above the wick. Okay, very important that we have a few pips above the wick, okay, just in case there's going to be another candle which doesn't take this high and then moves down. So it's like a break and retest, okay. We need to go a few pips above here, okay, so we're now above this candle and this candle, and we're looking for the same scenario, okay. So we want the wick to come down first, okay. As long as the wick respects this higher low, okay, and so the candle again will open here, okay, it will open, it will come down, maybe it comes down all the way here. What we want is we want this higher highs to be respected, okay. It's vital that these wicks are respected on the way up. As price passes our entry point here, the momentum should again take it in the opposite direction to which it's already come. All right, so we're going to go through this again. All right, we've come down into the level, okay, we've failed to close below the zone, okay, we've then come down and we've triggered in early sellers, okay, so their stop losses are going to be above here, okay. So we've got then a higher low on the 30-minute time frame, okay. So this area is what? This area is now liquidity grab, a higher low, and then once we pass this wick, we've now got a higher high. So once this candle opens here, like that, okay, we wait. We don't enter, we wait, okay? Very important that you wait, because we're anticipating at the minute that price action is going to continue up in our direction. So we wait for the wick to form, all right? As price passes through and moves from bearish to bullish, we have limit orders or buy stop orders here, okay? And as price moves through here, we will then normally see price action continue up in the same respect as what it did when it went bearish. So I hope you like this video. I'll see you in the next one.